Hi guys, it's February 23, 2023. I usually do not make a live stream on a Thursday. Usually I have free Friday classes, but since today's topic is about the Philippine markets, I'll tell you why I made today's study. First and foremost, I was reading a news article in India, which is it's an Indian finance newspaper, and it said that 82% of Indian stocks that crash from their all-time highs, and the definition of a crash is 50% from the all-time highs, never return, as in it just goes forever down, or even if it recovers it will never break above the previous all-time high. So I found this interesting statistic, and I wanted to actually share, hey, how much would the percentages be if it's in the Philippines? And the obvious reason why I wanted to study this is to answer, does cost averaging stocks in general really make money? Now, when you're cost averaging stocks, if the price of the stock reached an all time high of 10 pesos, say, let's say 5 years ago or 2 years ago, you might tend to think that, hey, I'm cost averaging because I could buy this stock maybe at 5 pesos today and it would reach 10 pesos or higher maybe next few years. Now let's test that theory because this is the sunk cost fallacy. Most people have the tendency to think that just because a stock reached, say, 100 pesos or 1,000 pesos or 400 pesos in the past, that it would reach, if not break that, when the overall indices finally break out to all-time highs. Let's say the Philippine index breaks towards 10,000 PSEI somewhere in the next 10 years. So, in today's topic, what I will actually try to study with historical data is what actually happens if you do cost average stocks. We do two studies. One is to cost average Philippine stock index names only, and the other is to check non index names. And I suppose I have to give you a summary. In summary, actually, the conclusion is quite common sense. Indeed, cost averaging index names presents a higher probability that it would recover. Unfortunately, it's not really a high probability. As much as just half of stocks, even in the index, would actually break out to all time highs. Whereas if it's a non index name, unfortunately, I was also surprised when I did the study. As little as only 10% or 90% of non index names that you would cost average will never reach your all time highs. Say, for instance, you bought it at the peak of year 2007, or you bought it at the peak of something like whichever year that it peaked. Even if you wait 5 years or 10 years in the making, if it's a non index name, unfortunately, they never return. So let's show to you these charts. Guys, it's gonna be 120 slides. And I think it's 120 slides. Let me check. Um, yeah, I have 120 slides. It's not really a full comprehensive look on the entire Philippine stocks, but I did choose your most active names, your highly liquid names as much as possible. So 120 stocks, I chose around maybe 100 plus Philippine names. And let's show to you the data. All right. Okay, let's go for the data. Okay, guys. Here. So the major risks of cost averaging Philippine stocks. A lot of the Filipinos, or not necessarily Filipinos, worldwide, there is a common strategy which believes that if you are cost averaging over a 5 year or a 10 year, and if you have a long term plan, they usually tell you that the stock market will present to you quite a low risk, substantial return as long as you stick to the plan, to have a consistent plan. Now, the summary that I'm going to share to you is that that could be a myth. Index stocks in general does have a higher tendency to return or recover if they have fallen 50% or more, although they will not necessarily be back to all-time highs, most especially if they fall more than three-fourths or 75% or more. However, non-index stocks, which is more risky, are left for dead with a very high probability, as much as 90%, of never ever returning to all-time highs. So I'm sharing the report right now, and the study that I've just made means that dollar cost averaging or peso cost averaging non-index names is a recipe for losing money, at least in the Philippine context. If you would cost average index names, you could, but then again, you've got a 50% chance that it does hit all-time highs. If you end up cost averaging a non-index name, the stats are against you, that your money will never hit all-time highs that it reached maybe 10 years ago or 15 years ago, and it will never really even recover even if you do this for a long time frame. So let's take a look. Amongst the Philippine stocks or the constituents, which is just 30 names, although these 30 names tend to go in and out, wait sandali. Although there has been rebalancing in the Philippine stock index, obviously, what we would assume that over the time frame that the Philippine stocks aren't going to be changing much. Although the reality is, yeah, some of them would be included or deleted and so on. So in some ways, the Philippine stock index has a tendency to be biased because the more that you have survived being in the index for as long as 10 years or more, that means that your float is high, you tend to have more activity, and you tend to have actually a recovery. So, amongst the 30 stocks that are listed in the Philippine Stock Index today, as of February 23, 2023, we see that Philippine stocks that are trading near highs or their all time highs are only nine. So that's 9 over 30, meaning 30% is trading very bullish. Six PSEI stocks have fallen more than 50% from their highs but are actually recovering, which means that 15%, 15 or 50% of your index constituents are technically in the neutral to bullish mode. You've got four stocks consolidating in multi-year pattern, so that's just neutral, neither bullish, neither bearish. You've got 11 PSEI stocks that fell more than 50%. There have been dead cat bounces, but they don't have like a recovering move. So we're gonna assume that the latter half is your bearish place in your PSEI, and the upper half are your most bullish or at least improving. Among the PSEI stocks that are which are these nine that are trading near highs or all-time highs, you've got ICT, Wilcon, Union Bank, SM Prime, Aboitiz Power, BPI, BDO, and Meralco. Let me show to you these charts. So this is your ICT. So we would say that this is in a very bullish uptrend. Your Wilcon is also still in a bullish uptrend. Your Union Bank is in a bullish uptrend. SM, even if it's consolidating, is still bullish because it's still near its highs. SM Prime also still in the bullish phase, even if it's just been consolidating for the last 5 years. Aboitiz Power, even if it is just consolidating, it's still in a bullish phase. BPI also still in the bullish phase, and BDO still in the bullish phase. Meralco is still also in the bullish phase, although that's neutral, still bullish because it's still trading near the upper range of its resistances. Now, there are six Philippine stocks that have fallen more than 50% from their highs, but have recovered. You've got Jollibee, you've got DMCI, you've got Semirara, you've got Emperador, you've got Aboitiz Equity Ventures, and your Metro Bank. So here you can see that chart from 300 to 100 Jollibee recovered back to 250. Your DMCI went from 16 to 4, recovered back towards 12. Your Semirara 45 dropped to 10, recovered back to 45, dropping to 30, but still in general, still in your uptrend. Aboitiz Equity Ventures recovered from low 30s to near 60s. Metro Bank recovered from 90s to near 40s towards 60s. So it's still in a recovering stage. Your Emperador fell on a very low slumber here, but managed to recover from low fives to as much as 25s, dropped to 15, but managed to recover back to 20. So it's still actually in an upper trend zone. You've got four Philippine stocks that are consolidating in multi-year patterns. You've got Ayala Corporation, Ayala Land, JG Summit, and URC. Let's take a look at these charts. Your JG Summit has been just consolidating over the last 7 years, 7 to 8 years. From a peak of 90 to a drop of 30, it's been going up and down, up and down. You will consider this more in a neutral range for JG Summit. URC also in the neutral range from a peak of 225 dropping to 100, still within a range, just a neutral point for your URC. Ayala Corp also from 1,000, although there's a blip here to 400, rallied back to 800 and is trading at a range here at about 600 to 800. So you're actually just consolidating for Ayala Corporation. Ayala Land 50 going back to 20, rallying to 40, dropping to 25s, rallying to 30, still in a range. It's quite a big range over the last 10 years for Ayala Land, but in general, it's in the neutral phase. You've got 11 Philippine stocks that have fallen more than 50%. They've had dead cat bounces, but in general, still actually in a downtrend. So you've got AGI from 30 dropping to 5, rallying back to 12, but it's still actually below a lot of moving averages and resistances. So it could recover, but it's still actually still in a DCB or still in a below downtrend phase. Lushotan Group or LTG, 25 going to 5, did rally towards 15, went down back to 10, but still in a very downtrend phase still. You've got San Miguel Corporation, quite cyclical, 180 to 40, 180 back to 80, rallying to 140, going 100. It's been in a very huge volatility beta for San Miguel Corporation. But because of the volatility, we'll consider it more into a downtrend with a lot of bounces. You've got Pure Gold basically doing nothing for the last couple of years. For the last 10 years, Pure Gold has basically just gyrated from 25s to as much as 50s, then drops towards 25s, rallies to 50s, drops back to 25s, 28s, rallies to 35, then drops back near 25s. So we've just seen basically Pure Gold rallying up and down, making a ping pong area from 25 to 50. Monde is still in a downtrend from 21 all the way to 11. We're still seeing a few dead cat bounces, but all the dead cat bounces have been sold on rallies here. You've got Ascend rallying straight towards 12, but they're still down here, somewhere trading near 6 areas. So it's still 50% below its highs. We still don't see, we don't know if it's going to consolidate, is it going to neutralize or continue its downtrend format here. You've got Converge from a peak of 45 dropping to 10, had a bounce here towards 20, but is still resuming the downtrend after that bounce. So still in a dead cat bounce phase for your Converge. Your PLDT rally to a peak of 3.5, drop near 1,000, rally towards 2,000, but still in a downtrend. You can see that there are several resistances here, so it's still considered a downtrend for your PLDT. Your Globe is generally in an uptrend, but because it's down from peak 3.5 to 2,000, 1.9, it's actually, you could still consider that it's also in a downtrend because there's not much movement here. Either it's just consolidating out of nowhere, or basically it's just trading between 1.5 to 2,000 to 2.5 for over the last 10 years. MPI has also gone nowhere for the last 15 years. You could see that it's gone from 2 to 7, back to 2, rallying to 4. Basically, it's just gone nowhere for the last 15 years. GT Cap also 400 to 1.4, dropping to 400, rally to 600, but is still actually in an entrenched downtrend zone here. Still a lot of resistances at 600, very much still in a downtrend for your GT Capital. Now that is for your Philippine index names. So guys, a few things, guys. In just 15 minutes, we took a look and a recap of the Philippine names. If you try to cost average any of these 30 names, what you are realizing is that unless you are cost averaging those top 50 percentiles, say you were cost averaging the Wilcons of the world, the ICTs of the world, then you would then your results would be great, because obviously if you cost average the BDO, if you cost average the BPI, yeah, it went up. That's why you're up. So amongst the 30 stocks in the index, 30% or 9 of them, if you did cost average 9 of them, you will be fine. But if you cost average the other 70% who are either consolidating, just neutral, or even a downtrend, chances are even after 10 years, you will not have a high portfolio. So even in just index names, our results are showing 70% of the 30 or 21 are not going to result into an all-time high. Only 30% or only 9 stocks would have done that, would have helped your portfolio if your strategy is simply, I'm just going to cost average until my time is 10 years or 15 years. So in 15 minutes, we have proven with the charts that cost averaging as a technique only has 30% hit ratio and 70% non-hit ratio. At least if your metric is that it should have a tendency to go all-time highs over time. Okay, so let's go further to our studies now with non-index names. Okay, let's go to the non-index names. Okay, so with the Philippine non-index stocks, guys, there are only 4 non-index stocks that are trading near their highs or all-time highs. You've got Century Tuna, you've got Ginebra San Miguel, you've got Nicolasia, and you've got Haven. These are the charts of Century Tuna, went from 10 to 25. So if you've just been cost averaging Century Tuna for the last 8 years, you are fine. If you did also just cost average Ginebra San Miguel, then you are fine. You can see that Ginebra San Miguel went into a very strong movement from 20s, 15 to 120s, only in the last couple of 5 to 6 years. But in the last 20 years, it was also just doing nothing. So it really depends. I'm not sure if your long term is 20 to 30 years. Sorry, this is what? This is like a 26-year chart, no, for GSMI. So if you were cost average GSMI from 2007 to 2017, that 10 years would have given you nothing, but the next 10 years did. So you could argue that it was still a hard move if you were doing just a cost averaging play on GSMI, unless you were cost averaging only since the last 3 to 5 years. Nicolasia, also you would have made a lot of money if you were cost averaging somewhere here about 2 to 3 pesos. It did go up back to 8 and 9. So far fell to 5, but still actually trading near 8. So if you've been cost averaging Nicolasia either for the last 5 years or 10 years, the tendency of your averages would be somewhere in the 3 to 4 zone. So you would still be actually up if you are cost averaging Nicolasia in your portfolio. This has been a monster, which is Golden Haven Memorial Park. This started in their IPO at 12 peso, currently trading at 700 peso. Very little liquidity, so there's no float here. But for any person who somehow was lucky enough to just be cost averaging golden haven over the last 7 8 years, yeah, this person made quite a lot of money. Now, these are the stocks that are non-indexed that fell 50% and are recovering. We've got DNL, Manila Water, China Bank, Keeper, Shakey's Pizza, Axalum, Cebu Land Masters, Bloomberry, GMA7, San Miguel Pure Foods and Beverage, and you've got Eagle. Okay, so let's take a look at some of these movements here. For DNL, it's been quite a roller coaster ride. If you've been just doing cost averaging, you've seen your shares go from something in the low twos to 12s and then dropping to four, then rallying back to eight. But in general, since DNL has been able to recover, I would say that the people who did cost average to DNL would still have a relatively higher return over the last 10 years rather than a lower return. For Manila Water, depending on your stock, given that the stock also pays dividends, but Manila Water has been also a roller coaster. You could see that from 5 here, it went to as much as 40, dropped back near fives, obviously, during the Duterte regime, with Manila Water being passed over from Ayala Corporation towards the Razon Group, rallied back to 25, drops to 15, then back to 20. Depending on your cost, I would say that if you were indeed in Manila Water for more than 10 years or 15 years, I think that you're break even given all the dividends that you've received. But it's been a roller coaster ride for any Manila Water long term shareholder. China Bank in general is still relatively good. It's been going up, down, but in general, it's been going up in the long term. So you could see that this stock has gone 28 years already, from 5 rally to 45s here. Had major drops, 50% here, 45 to 20, but managed to recover back to 30. Here, 25 dropped yet again to 15, but managed to recover. So we are seeing that China Bank seems to be a long-term fighter. Perhaps it's because of a good alliance with BDO. For the people who are aware, China Bank and BDO, same management there, or at the very least, you've got the same family. You've got Shakey's Pizza. This has been also a volatile ride. 16 dropping to about near 5 here, rallied back towards 10, and then just trying to recover here at 8. I think this is still below a lot of moving averages. So this is trying to improve, but as a non-index name, I think the long-term shareholders of this stock over the last 7 years are still underwater for Shakey's Pizza. For Cebu Land Masters, you've got 2.5, went to as high as $4, 4 peso, dropped back to 2.5. Sorry, it went as low as 1.5 here. But in general, it seems like all the non-index cost averagers here of Cebu Land Masters over the last 5 6 years, I think that they didn't lose money, but they didn't make a ton of money either. But at least they didn't lose money here. It looks like they're break even with some dividends. Bloomberry, it looks like this has been also a roller coaster ride. 8 to 16, 8 to 16, fell to as low as 4 here, rallied back to 14, fell to as low as 6 here, rallied back to 9. So if you were just doing your cost averaging style for Bloomberry, I don't think you lost money because you may have bought near the highs or near the lows, but in general, I think you're break even on the Bloomberry move because over the last 10 years, Bloomberry has been gyrating in a very, really, really roller coaster fashion. But Bloomberry has been seemingly in a trap range from 4 to 16. So it's just really wild ranges, but it's just been going up and down like the ebb and flows of the world. You've got Keepers Holdings 180, dropping to 1, rallying to 155. So far, it has recovered. It's just a new stock, it's just a year from now. So we'll never know what the next 5 to 10 years will be. Will it go back to 2? Will it hit all-time highs? So far, it is recovering, but we don't know what's going to happen in the future. So for now, it's too new. All I'm saying is that it is seemingly recovering. You've got Axelum also seemingly recovering from 450 to 250, rally towards 350, drops to 3. Looks like a break even for the last 4 years here for Axelum. So it's of course there are news that Axelum could be bought out by the MPI group. We aren't sure if it's gonna be bought out indeed, but there's rumors and tender offer. We don't know, whatever it may be. But so far, it looks to be in the improving category in terms of the non-index names. Amongst the non-index names, GMA7 was also in the doldrums, except until year 2020. It started moving all the way from near 5s to 16s here, and so far near 12. So if you have been a long-term cost averaging person in GMA7, the last 4 years was where you made a bulk of your money, whereas the last other 10 years before, then you were basically also in left for dead zone. So but GMA has been in a recovery streak, with their shows and their TV network, etc. So FB, this is your San Miguel Pure Foods. I don't think you can choose to use this year 2010. This, I believe, Pure Foods went into a lot of like backdoor and listing. So we could argue that it went from $120, 120 peso to as low as 30 peso, rallying straight to 50. I'm not sure if actually looks like it's still in a downtrend, since you've got definitely some resistance 120, 90, and 60. It really depends if you were able to buy it near 30 peso here, which was what, yeah. So baka ito nasa a little loss pa pala for FB. But it's showing improvement, pero yeah, just showing improvement. But it hasn't escaped the downtrend yet. Eagle, it's more in the break-even zone. So 16 fell to as low as 6, rallied to 16, meandered there, then managed to break out to all-time highs, 22, then back to 16. This is in a recovering phase for Eagle Cement. We will see what would happen. So far, it seems like any cost averaging person on Eagle Cement from about 16 to 12 seems to be doing fairly okay. Non-index stocks that had fallen more than 50% and we haven't seen a recovery yet. We see Security Bank, First Philippine Holdings, Robinson's Land, Mega World, Robinson's Retail, Cebu Pacific, Robinson's Commercial REITs, Ayala REITs, Mega World REITs, Philinvest REITs, P REITs, Philippine 7, which is your 7-Eleven, RFM, Aslag, Balay, Crown. A lot of these names have fallen 50%, or well, for some of them it's not yet 50%, but they haven't recovered ever since. So let's show to you some of these charts. Security Bank, after falling from 240 all the way to 90s, has not recovered and is still in a downtrend here. You could argue, depending on your time frame, maybe you're arguing that, hey, I cost average this name 10 years ago or 20 years ago, so your cost would have been lower than 60. So you'd still be up, but in general, SECB is still in a downtrend here. First Philippine Holdings, also, I don't know what your time frame is, but yeah, in general, First Philippine Holdings has also been just in a consolidation, down 50% from its highs, 105 towards 45, rallying towards 75, but sleeping here at $60. So, and that's been happening over the last 15 to 20 years already for First Philippine Holdings. Robinson's Land also dropping from its highs of 30 to as low as 10 here, rallied back to 20, that got bounced, sold again towards 15. Seems like Robinson's Land is also in the doldrums over the last 10 years already here. So yeah, Mega World also in the doldrums. If you'll notice, Mega World has a huge volatility move. You'll see that from 50 cents, this rally towards 6 pesos, drop to 2, rally to 4, drop to 2. From 2, it goes 3, or 2 goes to 1. We don't know there, but it's still in a very volatile, and unless you are buying low and selling high, I would assume that if you've been cost averaging Mega World, your cost would be below I don't know, if you were cost averaging somewhere in the 2013 to 2020 zone, your cost would be 4. If you were cost averaging Mega World 2013 to 2003, your cost would be somewhere at about 2 or 150. So either way, it all depends on when you try to cost average Mega World, but it still is in a downtrend. So a lot of the property stocks are still in the downtrend in the Philippine context. Almost all the REITs are down 50%. This is your Robinson's commercial REIT, 9 peso to about 450, downtrend there. Ayala REIT, 50 to 30s. I think this is the only REIT that is technically up from its IPO, since the IPO of our REIT was, I think, as 15 or was it 20, guys? But either way, it's actually down 50% from its peak and hasn't recovered since. And seems like the downtrends on the REITs continues to persist. Robinson's Retail, from a high of 100 drops to 50. Still no sign of hitting any all-time highs anytime soon. Cebu Pacific, also nothing seen here for an all-time high after dropping from 110, consolidating here at about 40 peso over the last 3 years already for Cebu Pacific. Mega World REITs, from 22s down to 12s, 50% lower as well, still in a downtrend. Your Philippine 7 or 7-Eleven, after a blistering peak of 160, so far in a downtrend, 160 to 60 and 80, still in downtrend move. So we don't see any recovery anytime for 7. A lot of sellers here don't know where it will stop the bleed, but um, looks to be in a downtrend. Your Phil REIT, 8 peso towards 5 peso, also in a downtrend. P REIT from 1.7 to 1.5, just listed a month ago, still also in a downtrend. Your RFM from 6 towards 3, still in a downtrend for the last 10 years. Your ASLAG, just listed last year. Um, yeah, just listed last year. Still consolidating, but also down from 2.3 to 1.7. So it's not like 50% down, but it's down about 15-20%, no, from its peak here. Yeah, yun. So it's just consolidating for the last couple of months, nearing a year on July or June. Your balay is down 50% from the July, or yeah. So from the peak of August, 1 peso drops to 60 cents, just consolidating there. Your crown has been in a downtrend from 3 pesos to about 1.2, 1.5, also down 50%. We've got a lot of left for dead names in the Philippines. I'll just read it to you. In the banks, you've got RCBC 140 to 20 bucks, PNB 225 to 20, East West 25 to 6. Among the conglomerates, you've got Costco 18 to 4, Lopez 10 to 1 to 8 to 2 to 4. So Lopez has been in a volatile move, but in general, still in a huge downtrend. Your ABS-CBN 60 to 7. Your oil-related counters in the Philippines, your Shell is a complete downtrend, 80 to 17. Petron 18 to 2 bucks. Among some casinos here, you've got LR 20 to 2.9. You've got PLC 3 to 50 cents. Bell 6 to 1.4. Among some semiconductor industry in the Philippines, you've got IMI and Tech 50 to 5. Surtec 60 to 3. Mega wide construction names, 20 to 3. EEI 14 to 3. Some agriculture like Rojas Holdings ba to? Some sugar, something, RCI, 8 peso to 45 cents. Frutas goes from 2 to 1. Ani goes from 25 to 5. For your Max Chicken, 60 to 5. Although I guess 60 was a backdoor play. I would assume like the actual trades, I think the activity was about 20. So, but still, a left for dead name so far. You've got supermarket like All Day, left for dead, 90 cents to 20 cents. Your Mary Mart is 8 peso to 1.4. Your Mrs. G, which is your Gaisano group, 6 peso to 138. Your store specialist Inc., 10 peso to 1 peso, managed to recover towards 1.6, but still in the left for dead zone. You've got All Home 10 to 2, Left for Dead, Medic 1.5 to 0.5. A lot of your mining stocks, save for Nicolasia, DMC, and Semirara, are actually strong. Everything else is Left for Dead. Felix 25 to 2.95. APX 7 to 2. Arguably, APX rallied from 1 to 2, but it's still actually in the Left for Dead zone. APX 7 to 2. Atlas Copper 20 to 4. FNI 12 to 2s. Felix Petroleum 45 peso to 4 peso. Coal, which is 1.5 to 22 cents. Lepanto 150 to 11 cents. Manila Mining from 8 cents to 0098. APL, Apollo Global, from 45 cents to 3 centavos. Amongst property names, also Left for Dead, Philinvest Land, 4 peso to 80 cents. DMW, DM Wenceslao, 12 peso to 6 peso. Your CPG group, Century Properties Group, from 4 peso to 36 cents. Your Jerry, 2 peso to 90 cents. Double Dragon from 70 to 6 peso. Rockwell, 5 peso to 1.3. Primex, 7 to 1. Vistaland, 8 to 1.8. A few names like Macro Asia, 18 to 4.5 peso. FA, 3 peso to 30 cents. Now Corp, 18 to 1. Tug, 6 to 1. Chelsea Logistics, 11 to 1. Dito Telecom, 18 to 3.5. STI The School, 1.7 to 35 cents. We aren't commenting on these names. We're just saying that their all-time highs were that and their current levels are these. And from a simple way to explain it, they are Left for Dead. And if you've been cost averaging and believing that cost averaging is a strategy, you're cost averaging yourself to 80-90% sell-offs that does not seem to have any probability of hitting their all-time highs anytime soon. Let me show to you the charts here, your Shell Philippines. So again, let's repeat the charts. Shell Philippines from 80 to as much as 17 pesos here. Petron from 20 to as low as 2 pesos here. RCBC, depending if you're talking about 140s here or the 60 pesos here, but try to cost average that within the last 20 years. You're basically Left for Dead, 20 bucks. PNB from 225 here or 75 here or 100 pesos here, all Left for Dead. It's 25 bucks here or 24, 23. East West Bank from 25s to 5s or 6 or 7s. Costco from 18 to 4. Lopez Group from 10. As I said, it went to 1, then to 8, then 2 and 4. It's been consolidating up and down and very roller coaster. But in the end, after several 20 years, it's still down and never reaches their all-time high peaks here. IMI, peaks of 50, or you could argue 20. But right now, it's, I think, trading at about what's the price of IMI here? Besides trading below 10, it's trading at 5, I think. Mega Wide 25 to low 5s, low 3s. You've got Annie from about 25 here or 15 here to 5 areas here. Maxes, depending on these, maybe you could consider this a backdoor zone. So maybe this is the more activity area. You can see there's volume here. So somewhere about 20 to 30s. Then nowadays at 5 bucks for Maxes. EI, peaks of 14, now trading at about 3 bucks. RCI, 7s and 4s here, now trading at 40 centavos. ABS is 60s here, now trading at about 6-7 pesos. Frutas from 2 peso here to 1 peso here. Still in a downtrend. Tech, Surtech, 60 and 30s here, down towards, is it 3 bucks? 3 bucks. LR, 10 bucks to as low as 1, I think here, rally towards 2, 3, but still strong downtrends over the last 10, 20 years. PLC also had peaks here of 2 peso, trading at 50 cents, so still in a huge downtrend move over the last 10 years already. Bell also over the last 20 years from 1 to 6, now straight at 1, still doing nothing over the last 20 years. Felix went from 2s to 25s, back to 2s yet again. So it's like a full cycle over the last 20 years for Felix Mining. APX went from cents to $7, back to 1, rallied to 2, but still in the huge downtrend zones. Atlas went from low threes towards 20s, 20s back to below fives, rallied to 20s, back to below fives, rallied near 7, 8, back to below fives, and I don't know, it goes up and down, but in general, it's like in a long-term yo-yo mode for Atlas, and generally, once in every 10 or 15 years, it may go up to 20 or it may never happen. FNI, it goes from 1 to 10, then back to below ones, rally to twos. Also like a yo-yo movement. Philex Petroleum from a peak of 45 here, dropping near, what's this, 1, 2, 3s, rally towards 20s, drops towards 5, rallying 15, still at 5. So still in a huge, if you were just doing cost averaging here, you would be losing money. Lepanto, you can see that this went from 25 cents to 1 peso 50, then dropping towards 10 cents nowadays. Manila Mining from 1 centavo or less than 1 centavo to 7 to 8 cents, now less than 1 centavo. Coal from 150 towards 25 cents. APL from 5 centavo to 45 cents, now trading at about 3 cents. Philinvest also doing nothing. Peak of 4, peak of 250, dropping towards 50 cents here or 40 plus cents, nowadays at 80 cents. DMW had a peak of 12, dropped near 6, and still steadily sleeping there at 7. CPG had a moment to rally up, then went down from 4s, fell down, and then currently 36 cents. Jerry had a rally here of about 2 plus and trading at about 90 cents nowadays. Double Dragon from 70 all the way to 6. Rockwell from 5 all the way to 1.5. Primex from 7 all the way to 2. Macro Asia 18 to 5. All Home from 12s to 2s. Mrs. G from 6 to 1.5, 1.4. SSI from 10s to about 1s, rallying to 2, still in a huge downtrend move here. All day from 90 cents to as much as 20 cents. Mary Mark, 8 peso to 1. Medic, 150 to 50 cents. FA, 3 to 50 cents. Now Corp went to 18, back towards 180 or 2. Chelsea from 10 to 1. Tugs from 6 to 1. Dito went up from 2 to 18, back to near 2s. STI from 175 towards 25 cents. And as you can see, guys, very carefully from watching the charts, guys, just from watching the charts, the major risk of the peso cost averaging phenomenon is that non-index names, almost 90% of them will never reach all-time highs. So if you are trying to dream that, oh, it's going to go back to that 10-year high or 20-year high, that is merely a dream. Now, if you are so lucky to have chosen the 9 names in the index names that are the only ones hitting all-time highs, good for you. If you are one of those few names that are buying some non-index names that happen to be going up and away, and you're cost averaging that, good for you. As you can see, the odds are against you if your strategy is, I'm gonna cost average and wait for my money in the next 5 years or 10 years, especially if you are cost averaging a downtrend name. And unfortunately, when a stock crashes more than 50% and it's a non-index name, the probability of it hitting back towards that all-time high is very, very low. So, I don't want to take your time But I hope Filipino traders and investors, most especially the investors who stick to their mythical rule that cost averaging will make me money in the long term, I hope that the charts is evidence enough to you that maybe your data and your conclusion is not in the same zone. You can cost average a few names. We talked about them. But the rest of the names, good luck. Thank you very much. Bye-bye. Thank you, and I hope that you like and subscribe Awesome 10X for market updates, sometimes in the Philippines, most times in the US. But of course, I would always try to give some Philippine info if I wish. Thank you very much. Bye-bye.